Hi everyone, welcome to your daily update for Solana BTC. It's a prime day today, so we only have a one-day close, which means we don't have to look at too many different timeframes. Also, no surprise that we have just kicked off a little bit of a short squeeze. Overall, the BTC structure is still showing a little bit of a warning sign, even on the one day, that this may be a bit of a fake squeeze, and we could still see reversals from around that 105 area. Sol is a little bit harder to pick. The they when we get to the chart, I'll show you something which sort of implies that they were quite happy to release some of the shorts before they went up, which yeah tends to indicate that they were more worried about just bringing in more longs. So as far as the liquidity goes, we have everyone obviously very quickly has flipped bullish. They've all started chasing this pump. So everything down to about 146 people are feeling pretty safe with, and of course down to about that 97 area on BTC, everyone's feeling pretty safe with. Not a lot of new shorts opening up, as you can see, so it's pretty empty to the upside. If they took the daily liquidity up to 105, they would have everything on BTC, and same if they went up to sort of about 167 to 170, somewhere in there would pretty much be all the daily shorts that have opened up, all gone. If we look at the 7-day, it'll show a slightly different picture where still there's a lot of shorts open, and you can see how the quick move up in Seoul particularly has just trapped a whole bunch of people who are in shorts who they're probably a little bit underwater now, and their liquidations sort of kick off as we move into this 163 through to about that 173 174 area. And that is often why you'll see a short squeeze start quite quickly, and it traps those people. And the thing about short liquidations is short liquidations are infinite. If they were to do a little bit of a dip now and people felt safe, they'd add to their short, and then if they spiked back up again, they'd trap them with even more risk. So one of the key things about trading is that you just never want to increase your risk. Don't add to a losing trade. Have the same risk on every trade. You can judge, or like for me, what I do is I actually risk assess the type of trade first, and that's something you can do after you've been doing it for a while, and then you can assign a risk based on the risk assessment of the trade. And so if you're looking at something and you're thinking, oh, it's going to be a pretty high risk, I might assign 1% of my portfolio to it and take that chance. And if I lose 1%, I lose 1%. But you might also look at something and go, well, look, the last 99 out of 100 times that I've taken this kind of structural trade, I have had no problems. The one time I lost would have been because it happened to be some kind of news event or something that I took the trade on. I shouldn't have done it. Maybe I took it between hours. I shouldn't have done that. There could be reasons. And then based on that, you go, well, okay, well, this is none of those, so I'm gonna go for 2%, on this trade. So, first of all, you should never really add to your risk. But then after a while, once you've started to realize that there's kind of two risks, there's the monetary risk and there's the risk of the trade playing out, and they are different. So yeah, that's the advice. Whereas a lot of these people, if they're stuck in these shorts now, the worst thing they could be doing is they could be adding to those positions, because for the last couple of days we've talked about the price range that it can move in, and certainly going into the 170s is well and truly within the range. So and likewise, so is going back down to the 140s. So be careful with your risk from both perspectives. As far as BTC goes, a little bit interesting that there's kind of a big cluster up to about 107, because 107 is also one of those key points of daily relevance on a prime day. So we'll look at that on BTC, and they'll be taking everything basically if they went down and hit that 97 to 96 area. If we look at the 30-day, so 30-day liquidity is obviously a bit wider, but unless they push it up over 211, they're not really getting into that top band. Past 105, it's sort of thinner on the 30-day, so you can see them going up past 105, but it doesn't, whether they push above 108 to hit 110 on a shorter term basis, that would be a little bit questionable. Likewise, going down 96 to the downside, and Yeah, the liquidity on Sol just almost paints a perfect picture of the structure, because you can sort of see that 173, 174 resistance. We've got liquidity up to there. Scary. If you're watching my videos, just you should know, do not be putting your liquidation levels and stop losses inside the ranges. Yeah, there's a lot of people here that are on this liquidity map. So, and same to the downside. There's a 147, 144 maybe at the bottom if they took everything. But the 30-day, because obviously we've had a lot of wipeouts, there's not a lot of longs left that have been open for 30 days. So that's all that's kind of saying. Okay, let's jump in and have a look at these charts. Okay, so Sol BTC has actually been, through this whole thing, Sol BTC has been holding up really, really, really well. With it being a prime day today, so just on this little side here, you can see we've got all these multi-day closes that we get tomorrow. So I'm already looking ahead to see if what relevance is in those. But as for today, all we have is a 1 day. So the areas that exist in here that mean anything on a 1 day, number one is the trend that has been created or arrayed off the bottom trend here. So we are currently above that. If we stay above about 15703, then we're going to be above that trend. We've got the break level of this prior range up here, which I was about to set off an alert. Just delete that. We've got the break level of the prior range, which is sitting at 15771, and the candle's body is just kind of hovering just over that at the moment. So it is a hard close range, and it is slightly more important than that would be the origin resistance, which is confluent with the downtrend or the prior broken trend that it pushed back under. And that seems to be what's keeping it in place right now. So if we were to get a move up in the next few hours and we were to close over 15869, then we'd be in a position both to be getting back the prior broken trend again, as well as being back up over the origin support level there. So that's kind of what we want to see by the end of the day. If Sol's going to maintain strength, as you want to see it get back up over that level, and then of course it's got to contend with the exterior trend, which is going to be sitting about the 162 area, and then the next levels are going to be once we hit the 16699 sort of area, where we run into the support that was broken by this lovely dump that we got, and we've got to get over that, and that also means we'd be over that trend, and that's kind of how the process has got to do. Now, as far as will it do it, it's very, very likely. It's kind of just a matter of time that Sol's going to gain strength against BTC, because if we just look at the bigger picture stuff, we're pulling back up off weekly trend support, we're pulling back up off weekly horizontal levels, monthly horizontal levels, and we're pulling back up off 3-month horizontal levels. Now, the minimum bounce targets for these levels are 16652 roughly for the biggest one. So if we go back and have a look and see what that means on the daily, that means getting back up pretty much to the whole candle at the top of this distribution range. So what is almost a given. There's no 100% in trading, but this is almost a almost 100%. We'll call it a 99.9. That if we just treated this as a local range and ran a trend through here, if this candle closes yellow today, it starts off a process of trying to come back to the range hold, and that would be coming back up to test an area between the wick, which is 16590. Surprise, surprise, that lines up with all our high time frame stuff, through to that 16928, so up into that area. And in the middle of that, we have the resistance. So it's kind of, it looks to me like the daily is basically just being pushed along because of those higher time frames. So the risk in this is that what happens when those higher time frames meet their minimum obligations, that's where it's really up to how Sol is closing on other days, on other time frames, like all of these multi-days that we have tomorrow. It really comes down to how they close as to whether it gets some form of continuation in its strength, or whether it goes, all right, the high time frame's done, the daily can now fall over because the daily is still under the hold. So that's what we're seeing there with our dominance. And I said dominance. I haven't really drunk my coffee fully this morning. I should really do that before the video, but I've got life chores and stuff to get done today. Might have to take a day off from trading. So looking at the BTC, USDT.D and USDC.D dominance, our safety assets as we call it. For those who are new to these videos, grouped together because some people just move between alts and BTC, the maxis. Other people, well, maxis probably don't even buy alts, but you get what I mean. People who just don't want to touch stables. And then other people, of course, move between stables and alts. So this kind of gives you a bit of an overview of whether people are risk on or risk off. So what we have is we have successfully failed, which is a real good term. We have successfully failed to break through that 16864 high time frame resistance that dates back to July. It's given the candle a good boot, and it's coming back down to test the hard closed support. So we haven't quite touched the support yet. It's just fractionally lower down from where it is now, which is the 16718. And when we touch that, if this daily candle does not close under that, which would also therefore be under the trend, then a very likely scenario is that tomorrow we get a little bit more continuation on the strength of or the dominance of alts, and then we get a rejection on the alts, and it's underneath the downtrend. So the rejection may be temporary, so that is kind of like a bit of a pullback on this pump. So they might just take out the people who have chased the pump. It may not mean new lows. It may mean that they just, they go, oh look, you jumped into your long at 160 jokes. We're going to push it back to 157. It could be something like that on Sol. So now if they do come down and they close underneath these trends, well, that is awesome, because if we can get candles opening underneath trends, particularly when they are underneath a downtrend and underneath a support trend and underneath horizontal support levels, then you've got a lot of power then to continue pushing them down, and that's then really good for alts. And as you can see, just looking across here on the side of the screen, we've had some pretty decent comebacks today. I missed some trades. Just I had them set at the base of the ranges, and they've just taken off from upper parts of the range. So might show you that if we get a little bit of time when we get to Sol. Okay, so how's it going on the weekly? Well, that level was also a weekly level. So it wasn't just a daily level we ran into a weekly level. And because we're getting close to the weekly close, the weekly level's obligations are starting to push the price back down. We came from the wrong side of the uptrend, so that's also part of how time and price and trends work. Because we came from the wrong side and we're getting close to the end of the time, it's pulling it back down. So we've got a hold body down here at about 66.50. That's possibly where it's going to keep trying to push down to over the next couple of days, and then it's a case of does that manage to bounce it back up, or does that fail? So good. And guess what? It was also a monthly level. Okay, so we just ran into a daily, weekly, monthly resistance on the safety assets. So it's starting to pull back. It's not really the monthly's job to do this, and because we got 23 days to go on the monthly, so it's more the weekly that's doing this, which means you might get weekends. You might still get a decent bit more to the upside over the weekend, but once the weekly obligation has been met, the monthly can do what it wants, so it could start pushing back up again. So that's how that's going. All right, let's look at totals. So daily's looking pretty good for a close here. If we close, we are engulfing the prior day's negative candle. Now, when we look at this daily on the BTC chart, I just want you to pay very close attention to how the structure differs slightly from what you can see here on the totals. So on the total market cap, we did not engulf to the downside yesterday. we now look like we could potentially engulf to the upside. That means that this could become a future range. There's someone in the Discord who wanted me to talk a little bit more specifically about how you predict ranges. So I'm going to put my fib tool with custom levels on this, and then what I'm going to do is I'm going to look at these levels and see if they have confluence with other levels that would be resistance. And it's a bit tricky to do this on totals, but it works way better if you do it on individual tokens. But the first couple of things that I can notice is that my 1618 level is kind of through this area here, and if I scroll back in the past, it was also sort of resistance through here. So that is making a bit of sense. This could be the base of a new range. Then I look at my 2 level, and the 2 level lines up perfectly with the whole candle at the top of the daily distribution range. So that makes sense. Now I look at my 3 level, and I go, well, what do I have up here? And I have got what looked like it was support here, support all the way through here, deviation here, resistance here. Yep. Okay, so that level looks like it makes sense. There's definitely something there. And then if I was to get all the way up here, I've got my range trend resistance, and I've got my exterior trend, and I've got my break levels. So that makes sense as well. So this is total crystal ball gazing stuff here, everyone, but this is how, sometimes I would look at it and go, is this candle the start of the reversal? Or is it this one? Or is it the next one? Or is it the next one? Well, this one has confluence with levels that will create price action between the various parts that make up the fundamentals of a range. So that means that this candle is quite likely the basis for the reversal. Doesn't mean that it doesn't fail, because these levels do represent levels that will be resistance, but it's a good start to establish that this could be our bottoming. Okay, so that's kind of what we're seeing there. And to sort of back that up, we have this downtrend coming through here. If we hard close, and to be honest, even if we hard close without an engulfment, just simply an accumulation candle closing on the opposite side of a downtrend starts that move to try and come back up and test the hold level. So this is looking like we are starting a daily reversal, a proper daily reversal. Okay, did not delete my trends. Right. So let's now have a quick look across these other totals, the weekly. So the weekly candle is pulling up, makes sense. Obligation, it dived the trend, it hit the hold, it's heading back up. Okay. Monthly, don't quite like the monthly. All right. Same thing about what I said about how once the weekly's kind of done its thing, the monthly might just say, actually, let's just go back down again. This monthly candle did not quite touch that range trend support, so it might be okay that it didn't touch it because the previous one did, and it might be that it's just running off the interior trend, but just keep your mind open to maybe a double bottom, okay, somewhere within the month, probably next week if it was going to do it. Okay. Now this one, this is alts because this doesn't include BTC. So not only is alts showing a much stronger engulfment, it created a nice support level down in here at that 1 trillion or 1.01 trillion mark. If this continues to move up, yes, it does have resistance, but it's moving better than the overall total. So this just sort of says that alts is actually where strength is pouring into, which is what everything else is showing us as well. So if you wanted to have a daily level for resistance on this, something to maybe have an alert on, you'd set it up here at about 1.13. If it closes under 1.13, then it may hit that and then have a bit of a pullback. But at the moment, we are even sort of recovering this interior, prior broken interior range. So, the pullback wouldn't necessarily have to be that big. But if we do get an overall pullback in the market cap or BTC, alts may even be stronger. Okay, so that's kind of what that's looking at. The reversal there looks pretty real as long as it maintains it for the next couple of hours. And if we look at it from a weekly perspective, same thing. It's pulling back up towards the trend. It's pulling back up towards the break level here. So as long as that just keeps going up, alts looking good. It pretty much retested everything it was meant to within the scope of this range anyway. And yeah, and it's already rejected off the hold level up there, so that hold level shouldn't be as strong anymore. So yeah, same thing. You've got the level here, which is that confluent with the daily target there, which is about that 1.13. So just make sure that you're paying attention when it hits 1.13 on the daily, just in case it does reject off that, because this has still got 2 days to go, so it can come up here, reject off that, push back down, bounce again. It's still got time. Right? It's still got time to mess with people. Okay. And the month, oh, sorry, what was that one? Oh, that was weekly, and that is, I've got 2 weeklies. My bad. That's meant to be monthly. Or not, or maybe not even meant to be there. Okay, moving on. Right, let's have a look at Sol. Okay, so if we look at Sol, we've come from the wrong side of the trend. So there is, and we've come from the wrong side of multiple layers of support resistance. So there is the chance that in the next 2 hours, this just goes, hey, joke's on you, and it starts pulling back. Right? That can definitely happen. We've seen it all happen many, many times. You get close to daily close, and then suddenly the price action just starts to sell down. So as far as judging intention, if that doesn't happen this time, that's quite a big thing, really, because everything says it should. So a little bit different from BTC, that we didn't get a negative engulfment in these prior 2 closes. So that was showing that Sol sort of had a little bit more resilience, or a little bit more want to come back. If we have a look at this candle here on the daily and just see if it has confluence, what it does, it has confluence with the resistance level here at hitting around the 168. It has confluence with the resistance level here, hitting at 176. It has confluence with the whole candle and the higher time frame resistance at 185. And it has probably even got, yep. So this has all been support, etc. long term actually. So this is probably higher time frame stuff up here at 194. So this candle definitely could be the start of a daily range forming. Now, if that range is to form, what often happens is you get an impulsive move in the next candle. You'll probably run into this 172, 173 sort of area. If it holds that for the day, it will retrace back to this support level here, which is sitting here at about 168, 169, bounce off that, and then start moving through the range levels as it develops the range. Each one of these levels is capable of failing the range or creating a rejection, which causes the range to fail. And you do not evolve from the daily range into something bigger until you basically get above the 194. Okay, so that is total secret sauce alpha there. Like, you could pay for 1,000 trading courses and no one's going to tell you that. So that is pretty much psychically crystal ball looking at how ranges can get created. Okay, and since it's a prime day, I'm just going to throw this at you and show you what that looks like when you look at that on a lower time frame. So, hello, this is our 1 hour range. So we get this candle. We check the candle. We get our close, we continue a string up above it. Cool. So we basically go, okay, right, well, we've kept closing candles. We close this one. At this point, you can start building a swing position and you can start targeting the next levels. They each have confluence with the different resistances. And then the topside target is there where I marked the line. So that's where we're at now. Now, if we want to break out of this for 1H range, we need to develop a higher time frame range, which is going to be something like a 4 hour. So now if we have a look across at our 4 hour, well, look at our 4 hour. Our 4 hour has a hold candle at the bottom of it. It's holding the price above what would become the base of the range. Does the base of the range have some form of support confluence? It does. It's got a break level it can hard close, which is currently causing this little rejection between these levels at the moment. There's a prior broken trend that it could hard close again. So there's confluence with that becoming a support area. What have we got if we start looking up through our range levels? We've got 167, which would be roughly the hold candle here. We've got 173. which appears to be some form of inverse resistance or support. So we'll scroll across and have a look across the side here. Sure enough, it was support that held up a prior range over here. And if we look up here, what have we got? Well, clearly the top of this range would be a 179.886, and that would be the broken origin level that has not been retested since the failure of the range. So all of that, top secret info right there, guys, is how 1 hour ranges form and build 4 hour ranges. And then looking across to the daily, what do you think this is in its absolute infancy? Well, it's just one candle. But the 1 hour was one candle at one point, and the 4 hour was one candle at one point, and now the 1 day is just one candle at one point. So this is kind of how ranges evolve. At any point, one of these timeframes can fail, and then the range will start to evolve in the opposite direction from a yellow candle at the top of, in fact, just to throw it out there, everything works in reverse. There you go. See this level here? Lines up with the 2. See this level here? Lines up with the 3. See the range that we are rejecting now is here, and it started here. Okay, so this is the one that controlled the daily failure, was this range. And if we flip our chart upside down, sometimes it's just, that's how people's brains work. A lot of people just, they can only really see it one way. If you switch those colors around, sorry guys, but if you switch those colors around, does it look like you're now getting stuck under a trend and you're possibly going to engulf and you're possibly going to fail? And if this chart was a chart for a long, you would be thinking, okay, I'm about to short. Okay, we'll flip it back the other way. No different, absolutely no different. Now, for everyone who thinks that that is amazing, mind-blowing stuff, put something in the comments, hit the like button, hit subscribe. Yep, do whatever. If you don't like it, then question it as much as you want, but go look at it. Go look at it on the charts, and I've been doing this a while. You tell me if I'm wrong. Put that in the comments too. If you think it's wrong, tell me if you think I'm wrong. Okay, let's look at BTC. And also, sorry, most of that you're going to have to look at on a computer or probably on a TV or something. It's I know a lot of people look at it on phones, but big charts like that are spread out can be a little bit tricky on a mobile. Okay, so I mentioned earlier that BTC didn't look quite as good. Now, this is kind of the problem for actually getting an altcoin to go up, is that everything we've seen so far is that dominance should be shifting towards altcoins. The total market structure of altcoins is showing a better recovery than the other market structures totals. So everything really should be like, okay, it's alts, 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 alts. And certainly just looking at these numbers, it's alts, right? They're all definitely, moving a lot better today relative to Bitcoin. The only catch is that Bitcoin still has an engulfment to the downside here. We can just chuck a simple fib on that and go, okay, well, it did hit the 99,532. So maybe that's done. Could be done. Maybe that's it. Maybe that creation of a downside range on BTC has failed, right? Now, if this candle gets to the top of this and closes over 103,830, but preferably over the wick. If you're going to create a range, you really want to be over the wick, right? Because that means every single piece of distribution structure that exists in that entire day at any fractal time frame has just been overcome, right? So that's the importance of closing over a wick, right? So, wow, this is a very educational video today. So that's what we want. We really want to close over 104,186. We could take a close over 103,830, but we need a really good day tomorrow. If we can get a close up over 104,406, then we're getting back up inside the range trend. If we can get a close over 105, and 105 in my opinion is pretty much the target for this daily move at the moment. So we've got a pure resistance range in here. We've got these non-pure ranges down here. they've added, so that these could exist on other time frames, but they've bounced this. It's moving up. The first real resistance was that 102. Yesterday, you would have noticed that we got to sort of around 102s, and then we had a bit of a pullback, and then we've pushed back up again. If you view all this, if you mark these lines out, and then you look at it on the lower time frame, you'll notice that price is actually ranging between these areas. And because they're not hard closed areas until we get to 104, they're not really guaranteed resistance yet, right? So what they technically are is, I guess, areas of polarity where resistance is or support is trying to be created, but it's not till it's hard closed that it really is actually proven to be. So we could get a move up to the 104.4. We could get a move up to the 105. If we don't hard close over 105 today, it's kind of borrowed time. We have to get over that. We have to hard close the candle over that, and then we can challenge these upper levels. There is heaps of resistance, 106, 107, 107 point something else, 107 point something else, 107 point something else. There's tons of it. But there's also another rule when it comes to charting, and that is that most broken ranges or levels get a retest to prove that they are or aren't broken. So there is both incentive for price to move back to these things as well as price to actually reject off these things. So yeah, BTC still, there's just something wrong. It just looks like it might fail. And if it does fail, unfortunately, the ranges like Sol, which are in their infancy, they're going to probably fail as well. And then you're going to be looking at the next blue candle to see if it lines up with areas of confluence, you know. So that's what we're seeing there. If I double check that candle, 106 makes sense, 109 makes sense. That doesn't make, oh, it does a bit. Yeah, 113 makes a little bit of sense. 116, yeah, 116,807, which is the top side from over here. That makes sense. It's close enough anyway. So it does make sense. So you never know. We might just get a bit of a pump towards the end of the day. Of course, it can always. This is the other thing that can happen too. Unfortunately, everyone, is that you can create the same size candle. Sorry, you can create the same levels by going down a bit and then having a bigger dip and then recovering it, because it'll be a bigger candle and it will come up with the same levels. So yeah, so just I'm still a bit on the fence as to whether BTC really is. Pretty convinced Sol wants up now, but I don't know about BTC. It might have some little fun and games in store for us. Okay, so let's have a very quick look at Tesla. Yeah, so Tesla ended up opening under my blue squiggly line, which is actually the 439 area there. And so it's had to come down to test these prior support levels. So it can bounce from here. It would possibly be a little bit stronger if it just came back down just a bit more. But it's always a little bit hard to tell when you're looking at stock charts, because all these displacements in the candles make the levels a little bit harder to be precise on. But I mean, you can be pretty accurate. This so for those of you that are learning all this, we had that rejection at the top of the range. It tried to create a hold level. It broke the hold level. It created a hold level to the downside. Well, in fact, it actually came down so much that it ended up underneath the bottom of that prior accumulation range, and then it's rejected off that. So it hasn't really rejected off the trend. It hasn't really rejected off the hold. That means that if it doesn't recover on the next candle, then yeah, it's probably going to keep going down. It really has to get back up over just something in here. It's also going to struggle just when it enters that hold candle, because it's now closing the candle below the wick, or if it does close the candle below the wick. I forget how this whole post pre-market thing works, but yeah, DG in crypto, 24-hour, 7-day-a-week trader. Can't wait for stocks to be the same. So anywhere from 440.1 or 0.71 upwards could be resistance to try and hold the price down, to try and keep it under a trend. And if the next candle, I would probably go as far as saying we're also going to most likely get some kind of new trend on whatever the next candle is, which is not the range trend that's here. So you got range trend resistance tomorrow at 439.84. You've got that hold level at about that 440 area through to about that 451. If the next candle or next day closes yellow, then there'll be an interior trend that can then either be broken or it can cause rejection. It all depends on how big the topside wick is on the yellow candle. So that's yeah, so it's definitely danger zone will be if it closes a candle under 419, then you're starting to move into some of the airspace. The next level to be tested would be the one down here at 411, and then if it closed under 411, it would be big air gap, and then down to the 380-ish area. I'll just check that from that other direction. Yeah. So what does that look like? If we look at it on the weekly, it looks like the candle is pushing under the trend. Let's just. Okay, so it's failed to get to the 2 at this stage. The week's not over. It can still go up. It can still bounce off the trend. It can still go up. But this could be failed range creation. So if we look at this, yeah, if we close under that trend and yeah, and level 3 down here at 351 is entry of the hold candle. Unfortunately, there's not enough data on the chart for me to tell you if 383 means anything on the weekly because it doesn't come, we don't have anything back here. But if we look at it on the daily, 383 is back in here. Yeah, 383 is kind of close enough to be in this 387 daily daily origin. So, or reverse hold actually, which is this candle in here, which is another thing we'll talk about one day. Reverse hold candles. Hold candles are meant to do one thing, but they can be flipped just like any other form of level. And we'll save that for another video. Okay, all right, so there's Tesla. If it starts to create a downside range, then it will just start going through these levels. Okay. For those of you who just want to see how these levels work, those are the levels. Take a screenshot of that, set it up, and it works from, say if you've got an accumulation that gets engulfed or gets overcome by distribution, you go body on the bottom to wick on the top. That would be working out a range that is going downwards or a short range. And if you're trying to work out a range to the upside, it would be that way, which is going from the top side body to the bottom side wick. Okay, and you can already see that as a candle, didn't really have a huge amount of confluence with anything, so that wasn't really the creation of a range. It was, that one made more sense as the creation because it lines up with the break level of the prior distribution. Okay, that's us for today. Like, subscribe, and put stuff in comments, particularly about what I've just told you today about that range creation stuff, because that's been some real secret sauce that I haven't shared a heck of a lot until recently. And jump on your replay tools and go and test it out and be mildly surprised. It is the key secret to compounding spot. It's the key secret to swing trading, and just another way that you can kind of see a few steps ahead in what the chart is going to do. All right, cheers.